2015 was a pivotal year for the Dublin office sector, not least because it marked the return of cranes to the landscape and the beginning of the next development cycle in the capital, following more than 5 years during which no new schemes were delivered. Transactional activity surprised on the upside last year, despite inherent supply shortages in the traditional central business district, with several large requirements fulfilled during the year. Annual take-up in the city in 2015 actually exceeded the record performance of 2014 on the back of encouraging increase in employment numbers and strong volumes of foreign direct investment. We also saw phenomenal rental growth being experienced in the CBD, with prime headline rents having increased from a low base by more than 50% in the 12-month period, reaching €592 per square metre or €55 per square foot by year end, as had been forecast. 2016 will see an escalation of much-needed office development activity in the capital, with several new schemes and refurbishment projects due to commence and others due to enter the planning process. A small volume of new office stock is scheduled to be delivered this year, but many of the larger schemes won't be completed until 2017 or 2018 at the earliest, which will continue to put upward pressure on rental values in the short to medium term until there is a meaningful improvement in supply. Fears about potential oversupply after 2018 are overstated, considering that many of the schemes in the planning process won't proceed at the pace anticipated for funding reasons or will have been pre-let before delivery. We believe that prime headline office rents in Dublin will reach €700 per square metre or €65 per square foot by year-end 2016. However, developers who are seeking to de-risk new schemes by securing pre-lettings may be in a position to offer more competitive terms. We also expect to see some prime rents in suburban locations increasing significantly over the course of the next 12 months, which in some cases will render development viable in these locations and lead to an increase in planning applications for new office developments in the suburbs of the city. Debt funding for speculative development is expected to remain elusive for some time yet, which will result in an increasing number of joint ventures and forward funding projects materialising, where experienced developers and promoters will team up with international capital providers to deliver office schemes. Now that Dublin is firmly in the midst of the office development cycle, the issue of energy efficiency and sustainability will become increasingly topical. In addition, office tenants are increasingly demanding more flexibility, which means that office buildings being constructed now have to be designed with adaptability, the efficiency of floor plates, and the productivity of the workforce in mind. Future-proofing buildings in this way will in turn help to reduce the incidence of voids going forward. The effects of legislative change introduced in 2010, allowing for upward and downward rent review clauses in leases, will really begin to materialise this year. Indeed, we expect to see an escalation in rent review negotiations and arbitrations in 2016. It remains to be seen if tenants facing significant rent increases by virtue of signing leases when office rents were at a trough will opt to remain in their existing buildings or seek to sublet or assign leases in order to relocate to more affordable accommodation, which could ease supply pressures to some degree. In this regard, some occupiers, including Arthur Cox, AirCap, and the Central Bank, are expected to vacate buildings to move to new accommodation during 2016, which will also release some second-hand accommodation to the market. The upwards and downwards rent review provision is also having a bearing on the decision-making for landlords, tenants and investors in the current market, considering the fact that prime headline office rents are likely to decline to more sustainable rates after 2018 if the supply of new office development comes on stream at the pace anticipated in the capital over the next few years. Although several large tenant requirements were satisfied last year, demand remains strong, which is very encouraging, with requirements for 2016 emanating from multiple sectors, including technology, pharmaceutical, financial services, and indeed the public sector. We expect to see take-up of more than 200,000 square metres being achieved in the Dublin market again in 2016, although take-up is expected to comprise a larger volume of smaller transactions compared to last year, when several large leasing transactions skewed the results somewhat. In the short term, the availability of modern office accommodation will remain constrained, and as a result we expect that less tenants will exercise break options. As rents continue to rise, we anticipate greater emphasis on workplace strategy, with more and more office occupiers reviewing and assessing how they actually use accommodation they occupy, and considering how they might use this space more efficiently and more effectively. One of the issues that gained momentum throughout 2015, and which is likely to be increasingly topical this year, is the scarcity and cost of residential accommodation in the capital. It is essential that our ability to attract foreign direct investment and in turn create office sector employment is not compromised by a scarcity of housing. So we urge the government to prioritise this issue as a matter of urgency over the next 12 months. In summary, 2016 will see an increasing number of cranes on the horizon as the development of the next wave of new office accommodation gathers momentum in the Dublin market. Speed to market by 2018 will be a recurrent theme, and we will see considerable focus on the timeline of delivery of the many schemes that are in various stages of the planning process. While there are no immediate concerns about oversupply, it is important that we keep this under review as the year progresses and consider every scheme on its own merits, but also in the context of the overall space being delivered to the market.